From the wise strategies of industry titans like Steve Schwarzman, David Rubenstein, and Henry Kravis, to the paradoxes and challenges of private equity investments, this video explores it all. Leon Black's astronomical earnings in 2013 and the resurgence of private equity reveal the dynamic nature of this market. But as David Bonderman humorously points out,
sometimes you're attracted because it's a great business and it's undervalued. Sometimes you're attracted because it's not a very good business, but the price is right.
Even in times of prosperity, the private equity world can be paradoxical. They understand why private equity buyout funds often yield high returns, and their evolving landscape is a captivating venture. Now, let's explore the fantastic world of private equity, where significant risks can result in much greater returns. Private equity is like a way for wealthy investors and investment companies to put their money into businesses that aren't publicly traded. They do this to hopefully make more money than they could on the stock market, even though it's riskier. There are two main types of private equity: venture capital, where they invest in startups that could grow big, and buyouts, where they buy existing companies, often using a lot of borrowed money. How has Steve Schwarzman advocated for profitable lending in the private credit sector, and what returns is he emphasizing? Let's find out. The co-founder and chairman of Blackstone, Steve Schwarzman, spoke about the potential of lending to companies in the private credit sector during a recent conference. He emphasized the attractiveness of earning returns of around 12 to 13% in senior secured bank debt, especially in an environment with low growth and minimal risk of loss. Schwarzman's insight came as Blackstone merged its credit and insurance arms, which now manage a combined $295 billion, surpassing the $137 billion in its private equity business. He also mentioned the possibility of the combined business growing to manage $1 trillion in the next decade. This shift in focus from traditional buyouts to private credit is in response to the challenges facing the buyout industry, which has seen a significant decline in capital deployment and exits from buyout deals. As higher interest rates reshape the investment landscape, private credit is becoming a more attractive avenue for profit. David Rubenstein, co-founder and managing director of the Carlyle Group, a prominent private equity firm, discussed the evolving landscape of the private equity industry during a keynote address at a conference.
Overcome certain disadvantages, or maybe you make them into advantages, and how I came to start a firm that is now the largest private equity firm.
Rubenstein highlighted the industry's growth, challenges, and potential. He described how the credit crisis, triggered by subprime lending, had abruptly halted the rapid expansion of private equity investments, leading to a period of adjustment. In his analogy, he termed the previous era as the golden age of private equity, characterized by big deals and high returns. He predicted a future platinum age, once the industry adapts by scaling down deals, reducing leverage, and seeking opportunities abroad, especially in countries like India and China. Rubenstein also emphasized the need for private equity professionals to communicate better about their role in creating value and economic expansion. Henry Kravis, a key figure in the realm of private equity and co-founder of KKR, underscores the transformative impact of private equity on corporate America.
Was to make long-term investments. For Bear Stearns, 5 to 10 years, that was unheard of. They didn't know what it meant. For them, long-term was overnight. They were a sales and trading firm.
Emphasizing its role in fostering accountability and encouraging managers to adopt an owner's mindset. Notable successes in private equity investments, like Fortsman Little's engagement with Gulfstream Aerospace and Blackstone's acquisition of Hilton Hotels, have illustrated the substantial return potential in this field. Private equity is more than mere acquisitions. It involves the meticulous selection of companies' management teams and the creation of performance-driven incentives. Kravis also underscores the active involvement of private equity firms in fostering growth and profitability in their portfolio companies. On the other hand, investing in private equity offers several advantages, including the potential for higher returns. As it has generally outperformed public markets over the past 15 years, it grants access to a broader spectrum of companies and industries not available in public markets, enhancing diversification and possibly lowering portfolio risk. Private equity firms bring specialized industry knowledge and experience to the table, offering unique insights and investment opportunities. Nonetheless, it's essential to acknowledge that private equity is a high-risk, high-reward asset class that should be part of a well-balanced portfolio. Furthermore, various types of private equity firms, such as venture capital and buyout firms, provide diverse investment options within this alternative asset class. In 2013, Leon Black, the founder of Apollo Group, saw his earnings soar, making a staggering $546.3 million. This was part of a broader resurgence in the fortunes of private equity firms. As stock markets flourished, these firms capitalized by selling companies from their portfolios, many of which had been acquired at high pre-crisis prices. This trend, combined with renewed trust from pension plans, sovereign wealth funds, insurers, and wealth families, helped the private equity industry rebound from record levels of fundraising. While this economic boost was welcomed, concerns of a potential bubble and a more competitive market for acquisitions have raised questions about future returns and the industry's sustainability. In short, Leon Black experienced extraordinary financial success in 2013, echoing the resurgence of the private equity industry. Despite the positive trend, concerns about potential bubbles and increased competition for acquisitions have cast doubt on the sustainability of this growth. David Bonderman, co-founder of TPG, humorously mentioned that they were selling everything that isn't nailed down. While this statement may seem at odds with the fact that TPG was concluding a fundraising effort for a new mega fund, it highlights a paradox in private equity. The private equity market operates in cycles, and the decisions of investors often need to catch up to the market conditions. When prices are low and it's a good time to invest, it's challenging to raise money. Conversely, it's easier to secure funding when prices are high, even though there may be more reasonable times to invest. As a result, the private equity market is highly cyclical, with investors reacting to past results rather than current circumstances. In brief, the Bonderman paradox in private equity reflects the cyclical nature of the industry. Decisions made by investors are frequently influenced by past performance, which might only partially reflect the state of the market today. The difficulties and contradictions in the private equity market are partly caused by this cyclicality, as well as other elements. The private equity landscape, as explored through industry leaders and figures like Schwartzman, Rubenstein, and Kravis, reveals a dynamic and evolving market. Leon Black's substantial earnings in 2013 marked the resurgence of private equity, but challenges and paradoxes persist, exemplified by the Bonderman paradox. Despite the risks, private equity's high return potential and role in economic growth make it a compelling investment arena. Are you intrigued by the strategies and insights shared by industry titans like Steve Schwartzman, David Rubenstein, and Henry Kravis in the world of private equity? Let us know in the comments below. If you enjoyed this video and want to see more like it, leave a like and subscribe to our channel. If you haven't already, tap the bell icon to turn on notifications to stay updated with all our latest videos. Thanks for watching, and I'll see you in the next video.